Hey traders, Todd Gordon here with TradingAnalysis.com. This is going to be a free video update for Friday, December 11th. And we just put a new position on in XLE. So we're going to set up the trade here first, looking at the dollar, then swing over to the XLE. And then I got a kind of fun trade to talk about right at the end. So let's dive in. Okay, so this is UUP, the dollar ETF. You'll see that we are rallying up in one. A nice ABC, what we'll call a flat in the Elliott Wave world. E-Signals Advanced Get is picking this up for us. Then we've rallied up in wave 3. Now we're starting to pull back in 4. Now remember, in a good impulse, wave 4 stays out of the territory of wave 2, so that's fine. And then, pardon me, as you get down to the intraday, you'll see that the fourth wave was a 3-wave move. Okay, so that's what we like to see. I don't think this is going to be all of wave 4, but I think because this is the support level, this is the first leg, and it's probably going to be the low. So what would probably happen is we're going to do this for B, that for C, this for D, and this for E. This wave 4 probably becomes a triangle as we go into the Fed rate hike next week. Okay, so I think there's going to be consolidation through the end of the year, and then eventually wave 5 will move to new highs. Let me go back to the daily for you, just give you that context. So again, it's going to be 1, 2, 3, consolidation, and 4, up and 5. So if the near-term low for this pattern's in, we're going to be sideways to slightly up. I think the energy market's going to continue to stay under pressure. So let's move over to the XLE. And this is a trade that we just put on today. I like this better than the crude oil market. The crude oil market continues to stay weak. I think it trades down to the 35 to 34 area. But I like the energy here because it's a cleaner wave count. It's easier to quantify risk, and the stock market continues to act weak. So the S&Ps could help pull us lower. So this is a simple little trade. 1, 2, drop down in 3, and then we're coming back to the 38% to the 50% retracement in ongoing wave 4 compared to wave 3. So a little bit of resistance there. The other thing I like to do is just measure distance traveled in 2, just see if you can get a little measured move there. And the measured move is going to be at 100% at $64. So let me clean this up for you and show you what I'm saying. Okay, so the 100%, which is just simply the measured move in wave 2 compared to ongoing 4, is right in the middle of the 38% to the 50% retracement. So you have a really good Fibonacci resistance zone there in wave 4 in this area right there. Okay, so it looks like XLE can continue on the downside. Now, here is the trade that we just put on. There's your little arrow to new lows in XLE. Trade we put on here, let me just bring up my platform. We did in today, let me see here. Where is this thing? In XLE, we did the December 63 half, 64 half call credit spread in the December 4 weeklies. We sold the 63 half calls, bought the 64 halves. Reason we did that is because 63 half to 64 half is just inside of this fib zone. I believe this fib zone is going to hold, then sell off, so the call credit spread should come away worthless. Okay, the other trade we had on that we were talking about was the GMCR trade. We've talked about this in prior videos, but if you haven't heard, we kind of got the low here in GMCR, and I'll show you how we did it. It's really just simple Elliott Wave. So Green Mountain Coffee was bought out, but it arrived into a fib and wave 5 support zone even before the buyout. So we went down to 1, 2, wave 3, wave 4, and then Advanced Gap gives wave 5. And then this was interesting. The market reported poor earnings, but yet the stock gapped up. So we had all kinds of wave 5 support down there. The stock acted strong, so we actually got long, and we had we did a call ladder, which is kind of an aggressive play, but we got the stock before, and the stock went up from like 50 to 90. So I have just a little bit left. I have one option contract that's up $3,100, and I got rid of most of it. So we bought the option contract at 85 cents, and it went to $32. So that's something that's just simple Elliott Wave into a wave 5 low. It comes up, you buy the first pullback, and I didn't expect to make 3,600% in the option contract, but that's a wave 5 move. You can fight the trends using Elliott. I mean, I don't know of any other methodology that allows you to do that. So that's that, guys. So I'm just gonna hold that little piece. It's kind of my token piece. I'm gonna hang on to it, and it was a good trade. Makes for a good year. So All right, guys, we're going to leave it there. Just a heads up, I am on CNBC Squawk Box tomorrow morning at 6 a.m., so I'll be up nice and early, about 4 a.m. tomorrow. So if you're up, I'll be on there about 6 o'clock. Also, guys, if this video did help, please hit the like button if you're watching this on the YouTube page. It helps this content rise up, and that's how Google judges the quality of material. So if you thought this was helpful, go ahead and hit the like. I appreciate it very much. And we'll see you on the next video update. If not, I'll see you on CNBC tomorrow morning. Take care.